You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in these wild and woolly vol markets? Well, you know what? Let's find out together, shall we? Because it is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you folks are binging. Make sure if you're just listening to Vol Views, you should be subscribed to the full network, wherever you get your favorite podcast. A lot of great stuff. We hit on vol a lot more than just on the show. In fact, Dr. VIX was on Twifo with me yesterday, and he pointed out this is a vol show. And I was like, you are correct. We do talk vol a lot on the network, not just on Volatility Views. Yet another reason why you should be subscribed to the full network. And of course, if you want to join us for the official after party of Vol Views, known around the globe as Options Oddities, well, I should say known around the globe to a select few, then head on over to the pro, theoptionsinsider.com/pro. That will get you past the velvet rope. You have all the Options Oddities fun. You missed an awesome pro Q&A with our good buddy, Mr. Tony Saliba, earlier this week, but you can check it out on the podcast feed and participate in all the future sessions. You get legit exclusives like that. Theoptionsinsider.com/pro is the place to go as we go around the horn and see who's joining us on this fine Vol Friday. First, out to the hinterlands of Chicago, where he is prepping for his grand trip across the pond to discuss all things vol in London. But before he goes, he's going to stop to talk vol with you folks, none other than a good pal, the once, future, and present Dr. VIX, a.k.a. Mr. Russell Rhoads. Mr. Rhoads, welcome back to the show, sir. How goes your planning and prepping for your grand trip across the pond?
You know, every time I go to pack, I turn around and the S&P's moved 50 points.
I know. It's been wild.
I'm never going to get out of town. So.
The S&P is conspiring to keep you back home, listeners. We'll be joined by some other folks in a little bit, but also joining us, holding down the guest hot seat this week, is a newcomer to the program and indeed to the network. He is Jeff Nguyen, the quant research head over there at Cboe Global Markets. Jeff, welcome to Volatility Views.
Good afternoon, all. Very excited to be here. A little bit about my background. So I have a mathematics background. I've been at Cboe closing in on 4 years now as the senior quant researcher. My day-to-day involves looking at trading activities and then researching investor behaviors to understand what investors are doing in the market. So some of that work is reflected on our derivative market intelligence weekly volatility digest, usually come out on Monday, as well as like helping Cboe making informed strategic decision with regards to new product developments, such as the VIX Decomposition Tool. So I work very closely with Mandy, Ed, and of course you're familiar with the flow master, Mr. Henry Swartz.
Yes, the flow master. Some crazy person dubbed him that. I forgot who that was. Oh, wait, yes. That was me. We'll get to all that fun. He mentioned a cool tool. We'll get to all that fun in a few minutes, listeners. That's a little bit of a tease. But first, before we get there, we have to head on down to the Southern Volatility Mecca, known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian. I was distracted by your shirt. Is that an Ithaca's gorgeous shirt?
It is.
I went to school in Ithaca. How do you have that shirt?
I had a buddy that went to school there.
Oh, okay, yeah. So I guess he survived, because the downside of Ithaca being gorgeous is a lot of people end up in the gorgeous. That is my enduring memory of leaving Cornell, as driving out after I graduated, and the black helicopters were scouring the gorge behind me for the latest person to throw themselves into the gorge. A dark memory, but I digress, sir. Welcome to the show. Your shirt threw me for a loop. I haven't seen one of those in a long time. But you know, listeners, none of us have seen kind of vol like today in a little bit, so let's get to it. A little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was and indeed still is from a vol and an unusual activity perspective, all sorts of fun perspectives. And today is going to be a fun one because where vol is right now, where the markets are, if you wait 5 minutes, we're back in that mode, listeners. It's not quite mid-April, but it's a lot of intraday action. As we're recording the show, listeners, the S&P is still up, but just barely up 0.15%. The Dow off about 0.5%, NASDAQ up about 1/3%. And our old pal VIX Cash hanging out right at about a 20 handle again, just ticked up. It was 19.75 right before the show, but that kind of belies the intraday action that we've had. The S&P starting off firmly in the red. The markets seemed quite spooked to kick off the session. We were close to 100 handles below where we are right now. Then apparently Uncle Mike and his cabal kicked in and they started buying the hell out of this thing, and they drove us to mixed. We were red across the board. Vol was looking a lot spicier earlier in the session. Let's see, how high do we get? We got up to about almost a 23 in VIX Cash out there, and we opened at a 21 handle, 21 1/3. So a lot going on out there. We closed yesterday, by the way, exactly at a 20. How wild is that? We don't see that too often. As we kicked off the show, we were at a 19.75 in VIX Cash. Puts us down about 2.25 points from where we were this time last week. Obviously, right now, if I re-rack that, it's at about a 20 even again, so down about 2 points. Volley, our old pal, Mr. Scott Nations, just the facts, ma'am, at the money vol measure, 1685 when we kicked off the show. Puts it down almost a full point, about 0.9 of a point. And our old pal VVIX at about a 107, down 7 points from where it was this time last week. So a lot to unpack as we're sitting here doing the show. It's another wild Vol Friday we got in store for us, which is what makes Vol Views so fun. All of our shows are fun, but it seems like for whatever reason, whenever we fire up the mics on Vol Views, the vol markets go haywire, which makes for some good show living at the end of the day. But let's go around the horn. Jeff, as our guest, we will start with you, sir. We'll get to all the VIX decomp fun in a little bit. Again, I want to save that for the folks. But let's start off. Give us your thoughts. Obviously, a wild week and indeed a wild day on the vol front. What is catching your eye? And by the way, no pressure, but I do see the Flow Master is listening to every word, and he will judge you. So just bear that in mind.
Thank you, Mark. So intraday today, what we see is that we start the day with a large bid for the 2030 Delta SPX 30-day call, and so that to us is signaling a temporary bullish positioning, right? So that big flow lasts until around 10:30 to about 11, and then and as we saw, we saw the market has a 120-point relief rally. And then so near the high intraday today, what we see is that around 11:30, we see that the flow flipped to a bit for more downside protection. So that bullish flow is gone. So that now I think signaling a temporary stall in the rally. And yeah.
All right, a lot to unpack there as we keep going around the horn out to the land where Ithaca is gorgeous. Actually, there's no gorges really in Austin. There's that one, I guess, where the bridges and the bats to be maybe considered a gorge.
But it's more of a river.
Yeah, it's a river really. So no real gorges there. So your shirt is deeply misleading.
Place.
It's going to throw me off for the rest of the show.
Yeah, Austin is not a gorgeous place.
It is not a gorgeous place.
Yeah, boy, what a dip and rip, huh?
If you snooze, you lose on this one today.
Now, I have been lamenting one thing about S&P vol and near-dated options every time I've been on this show.
You have been saying they're too cheap lately.
They're too cheap. They're too cheap. They're too cheap. And we saw that again today. If you went out yesterday's close with kind of a near the money strangle, and so like the 673, 675 would have been yesterday. 673 puts topped out at 950, and the calls are currently, after this rip, about $3.70. The total cost for that strangle, $6.65. And that was for Monday, not even for today. Today's one was maybe $4.50.
Oh, that gets you the whole weekend too. Okay.
It gets you the whole weekend.
Oh.
And so, it's just they're completely setting all of this systematic flow is crushing near dated options. You look at realized vol relative to the VIX, seems pretty normal, right? At average true range, you about $75 a day. You convert that into a volatility, it's good, like 1770. VIX is 20. Sure, makes total sense. But then near dated options are coming in at 13%, 14%. And because the market makers know they're going to get to buy it. I likened it to, I was talking to a friend of mine and trying to explain this to her. And I said, so imagine you were at a Chanel store and you were looking at a handbag. And then one of the employees came up to you and said, hey, we're having a flash sale and these bags are going to be 30% less tomorrow. What would you do? You would wait. So market makers are just discounting ahead of the fact they know that they're going to get to buy. They're kind of putting in a discounted price on those options, knowing that flow is going to come in and inundate them with gamma.
So you're saying the halcyon days, obviously when zero DTE first became big, everyone and their mother was hitting the bids. It was flies, it was iron, it was everything you could to sell all the premium. You're saying we've gone too far in that spectrum and now it's screaming deal time?
I do believe that. I do believe that. And it's mostly, I think, on the backs of these, these income ETFs like SPYI, QQQI, and then there are also like money managers running these things. But every day there's, in the zero DTE space, there's billions you know, 50,000, 60,000 contracts these guys can just set their watch to that they're going to get to buy.
That's true. There is more systematic flow you can rely on. Back in the day, it had to be, retail flow, and that was it. But now these funds are coming in every day like clockwork. So that is a little bit more reliable. So it does make it interesting. The one day it didn't work, or actually they kind of both worked, was, of course, Fed Day a few weeks ago, where S&P ended up closing off 0.0004% or something ridiculous. So if you sold that straddle, you sweated during the day.
You have
but
to
you did
trade
all right.
it. You can't just buy and hold.
Yeah.
You have to trade it.
You got to take off the legs when they get juicy.
When I was trading it today, I had something slightly different on, but I sold. I bought the. I sold the 60. I had the 67. I had the 6,800, 6750 strangle on. I sold the 6750 puts at $109, and then I sold the 6,800 call at $11. That's expiring Monday. Thought about hanging on to the calls. But I made $120 on a $65 strangle. I'll take it.
There are worse ways to go about it.
Indeed.
All right, out to the land of Mr. Rhoads, sir. Mr. Rhoads, obviously a wild one. I see you scribbling furiously as the intraday swings are moving us all over the place. Another wild vol Friday, sir. What is catching your eye out there?
It feels like, even with the stock market making the reverse and that VIX does not want to come down for the weekend. You got to be braced for this weekend, I guess. There's just too many potential things going on in the world. It looks like everybody's gotten past, government shutdowns and those sorts of things and starting to look forward. The thing that I haven't heard too many people talk about, the odds of a cut at the December meeting are at 50-50 now.
Yeah, I heard, yeah.
Yeah, at the beginning of the month, I think the last Wednesday the day of the last meeting, the odds were at 87%, and they continue to work lower. You're also looking at maybe only 2 cuts next year instead of 3. So I think that is probably what maybe has the equity markets a bit concerned. How much more benefit are they going to get? And how much more are they going to discount that rates are coming down?
I agree with you. And I don't know if you've looked at Bitcoin, but the S&P recovered. Bitcoin has not. It is breaking into new lows. And, Bitcoin is probably, I think, the market's best indicator of what is risk appetite.
Risk on, risk off.
Yeah. Yep. And it is still risk off.
Yeah, Bitcoin back below 100K out there, listeners. So if you're a believer that whither Bitcoin goes, so goes the market, then perhaps not a good sign for all that. But you know what is a good sign, listeners, is that we got some fun new tools to arm ourselves with on the vol scene. And I was chatting with your buddy Jeff, the Flow Master, yesterday, and he just drops out of nowhere this cool new VIX Decomposition Tool. And I said to him, what the hell are you talking about? What is the VIX Decomposition Tool? So I forced him to do a little bit of a spiel yesterday on the Option Block show because, it's a cool new thing that I think our listeners would be intrigued by. But I know the Vol Views audience would be down for more of this. So we needed to explore it in more detail here on the show today. Whenever we have people on here like Scott Nations or others, they're always lamenting, what does this move in VIX really mean? Is it coming from the puts? Is it coming from the calls? What is driving whatever move we're seeing in VIX cash that day? And the answer always was, we don't really know. We could kind of reasonably intuit based on the flow we're seeing, but there's no real answer. But those days are over, Jeff, with the launch of this new tool. So walk us through this. What the heck is the VIX Decomposition Tool?
Yeah, Mark. I think I agree with you. So I think the VIX has always been seen as kind of like, black magic because it's a mathematical calculation, right? And most people know the VIX index as the worry thermometer, right, for the stock market, or the fear gauge, if you will. So when stock go down, people usually get more worry, and then so the thermometer, so the VIX go up, right? But sometimes it's that weird. There are times where the VIX and the S&P move together. It's called spot up, vol up, or it spot out, vol down, right? Meaning that the VIX index either overvalue or underreact relative to expectation. So for example, like right this Wednesday, the S&P closed up 4 points, and then the VIX also closed green. So that's an example of spot up vol up. This decoupling between the VIX index and the S&P index occurs because the VIX index is, can be more accurately to be seen as the measure for the bid for optionality, right? Which is often, but not always, driven by demand for downside protection. In fact, sometimes that the VIX index go up, not because of the fear to the downside, but rather fear of missing out, right? FOMO. So increased upside in the S&P call demand, as we've seen in Liberation Day. So it's a quite a complex topic. So to bring further clarity to this VIX index behavior, so we as Cboe develop a framework to kind of disentangle this VIX index move to different principal components. And so the first component is the expected move per sticky strike. So this is essentially like this is how much the VIX should move based on what traders already expected, based on the move of the underlying, which is the S&P. Like for example, like it might rain, you bring an umbrella, right? There's no surprise here. So this factor, the sticky strike factor, is explaining most of the VIX move when things are calm. The second factor is parallelship, right? So this is to put in a plain term, is everything discussed here. Right? So when something really unexpected happen, like for example, like Liberation Day, or like October 10th, right? Like a surprise, everyone want to buy protection. So what that means is that all the option, both like put and call, they become more expensive all at once. And this is what makes the VIX jump so much on, you remember August 5th last year, so the yen carry unwind, there's a rush to buy downside protection. Now the third factor is the push-Q gradient. So this is people buying, pretty likely insurance, right? So trader first to buy premium, to buy like medium probability protection, like 20, 30 delta puts. So these are like the sweet spot of option. They're not too expensive, and there's a decent chance of paying off. Now this makes the left side of the volatility curve steeper, right? So that's the push-Q gradient. And then the other side is the fourth factor is the cross-Q gradient. So this is people, this can be seen as like people think the market might be going up. So sometimes people buy upside call even when the markets are falling. So this happened on Liberation Day, right? Trader was positioning for further upside as the market sell off. Now this factor can make the VIX go up even when the stock go up. So that's this sometimes it's confusing. Going down to the fifth factor is downside convexity. So this is, people are really buying lottery ticket crash insurance. So, dip out the money, put 1 to 15 delta, very unlikely to pay off, but like it will be a huge payoff, right? So, so this is showing like extreme fear of tail risk. And then last but not least, the upside convexity. So this is people buying lottery ticket for to position for a huge rally, right? So these are like dip out of money call, 1 to 15 delta call. So they're betting on, the traders are betting on a massive surge in the stock market. So on the Liberation Day, this was huge, right? This was, and it is, we've seen that, as the market sold off, the market did rally eventually, almost 14% in 30 days. So this is showing, like this factor is showing people positioning for, more explosive upsides. So these are like, the factor of like the VIX Decomposition Tool. So I'm going to pause here to see if you guys have any questions.
So listeners, if you want to check this out for yourselves, just type CBOE and VIX Decomposition. It's the best way to get there. That'll get you to the URL. There is also a white paper explaining all this if you want a little bit more detail. There is a URL, but it's not really navigable to go straight to there. So just type that into your browser and you'll get there. And then what you'll see here, listeners, is Jeff's breaking down here. You'll get a nice page and you could enter 2 dates. You'll enter your start date, your from date, and then your end date. And then it will compute all those factors that Jeff was just talking about. So you'll see the absolute changes over that period. Like I just put up on my screen, for example, just for a little bit of fun, I pulled up from April 1st of this year to April 11th. So obviously a pretty wild time in the markets. And I'm looking at the results right now. It gives you your sticky strike. It gives you your parallel shift, your put skew, your call skew, your downside convexity, and your upside convexity. And then it adds it all up into a total of your VIX decomposition factors, which is kind of interesting. Now, I was playing around with it for the first time yesterday, Jeff, and it looks like you can't do intraday as of right now. Is that the case still?
That's right. I think like intraday tool is still internal, but we want to release this, close to close tool first, like to see to gauge the market temperature, and then I think we have like a couple products in the pipeline. So
I like how you add up all of the factors at the bottom there. Is that kind of how you view it? Should people view it as the total of all these VIX decomposition factors? Do you think they should narrow in a little bit, maybe sticky strike or the shift, and that's where they should focus?
I think the add up is showing that because essentially we're trying to decompose the VIX, right? And so if the VIX move 5 point, we're trying to attribute that 5 point to the different 6 factor, right? So they the 6 factor always add up to what the VIX move was. So I think to which factor to focus. So I think for the most part, for most move in the VIX index from one day to another, most move can be explained by the sticky strike factor. And then when there's a big move in the VIX, is a lot of this is also in the parallel shift factor. So the sticky strike and parallel shifts are the 2 key factor, right, to explain most of the VIX move. And the rest of the factor, the put and call skew gradient, as well as the upside and downside convexity, they're there to showcase what the investor are positioning for, what they think what might happen in the future, right? So to use an example, let's use a recent example, right? October 10, which is last month, right? The S&P sold off 2.7%, right? And VIX jumped 5 points. So most of that was sticky strike from, that's a 2.6 point. 2.6 point of the VIX move was explained by sticky strike, right? And then next is the parallel shift. So we saw some surprise, right? The market was surprised by the sell-off. So there was some, so 1.7 point were attributed to parallel shift. And the remaining is the push and pull force of, the put and call skew gradient and then upside and downside convexity. So interestingly enough, amidst the sell-off, we see that trader was buying lottery ticket, right? They were positioning for a larger move upside, right? So 0.65 point of the VIX move was in upside convexity. And we see this prophecy fulfill the next regular trading sessions where the market rally 100 points from the bottom, right? So I think that is a good way to look at this VIX decom tool.
Yeah, I just put in some fun dates myself. Listen, I went April 7th and April 8th, obviously to a big 24-hour period there in the markets this year. I'm looking at here the absolute move in VIX over that period. VIX increased a little over 5, about 5 1/3 points, and went from a wild 46.98 to a 52. Man, 52, we're talking wild numbers here. And then, of course, it breaks it down by the decomposition factors. So you can actually see point by point. You'd expect a decent sized parallel shift on that day, and that was about 1.5 points. The sticky strike accounted for 2 1/3 points. The put skew, obviously, puts getting jacked there, 1.18. And then the call skew only taking off about 1/3 of a point. And then your downside convexity adding 1 1/4 points before the upside convexity took off about 2/3 of a point. And all that adds up to a total VIX move of 5 1/3 points. So fascinating stuff. I definitely encourage you to play around with this. Mark and Russell, were you guys as surprised as I was to learn that this tool existed, or were you more in on the cool kids club than I was, and you knew about this already?
I knew it was coming because of the paper that came out in August, but I wasn't aware that they had launched it yet.
Yeah,
I haven't had a chance to play around with it yet, but I look forward to doing so.
You have to roll in the research circles, and I do not. So
way to clue us all in, the rest of us, so that we knew this was coming, sir. You wanted to keep this one for yourself.
You know what? I'm defending myself right now. I told you when this paper came out in August that maybe we should look into having a discussion around it at some point on the show.
Oh, you're right. I do remember the paper. I don't remember them talking about a tool. I don't remember them talking about a tool.
No, you knew it was coming if you had attended the webcast or something like that. I heard this was a precursor to a tool, and honestly, I just kind of forgotten. It's been a couple of months.
To my credit, I tried to get Ed Tom, the author of that paper, on. He was too scared to come on. So, Jeff, you get the pride of place, Jeff. You were brave enough to come on, whereas Ed was not. So therefore, you get to talk about the tool, which is kind of fun. So this is interesting stuff, listeners. This is definitely something you should be playing around with if you're trading a lot of VIX, especially as Mark is talking about intraday. We haven't quite gotten the intraday VIX decomposition tool yet, but I have to imagine that is coming. And given the fact that we're seeing, put skew and call skew baked into this, I know Henry's been teasing this for a while. I have to imagine down the road, Jeff, this is also going to lead to maybe, dare I say it, an updated skew index, sir. Can we get any teases on that?
I think you have to wait and see, I guess.
Mark, they have been talking about that.
They have been. I know. I'm just
okay.
I'm trying to get Jeff into a little bit of trouble.
Jeff, Jeff may be under wraps right now, so I'll say something that he probably doesn't want to say. I have a funny feeling an updated skew is coming out.
It's no fun we don't get Jeff in trouble here on the show. Jeff, I appreciate you joining us. You did yeoman's work here talking the tool. We're going to keep on rolling with the show. Really quickly before you go, if there's any other things you want to highlight about the tool or give them some takeaways, have at it, sir. The floor is yours.
Takeaways was, I think I agree with what Russell said earlier about the race, right? So, this week we have seen like such a large sell-off, and the VIX has been, by and large, pretty mute, right? Like it doesn't really jump, like it's jumped like 4 or 5 points, but that's not really significant. So we see like a mute reaction in volatility despite like a large sell-off. So I think it reflects like the uncertainty regarding like the interest rate decision next month, right? Nobody know what's going on. So I think like that's reflect the uncertainty there.
There you go, listeners. So check out Jeff's handiwork. Just type VIX Decomposition Tool or Cboe and VIX Decomposition. Bonus points if you could spell decomposition, listeners out there, and you too can play around with this. It is in beta, so bear that in mind, but a lot of cool stuff. We always love arming you folks with new tools here on the show. As we keep on rolling, let's break down some other flow out here while we're talking about it, shall we? Let's get out to the land of the vol surface, whipping and sawing all over the place today. So this is yet another day where taking a snapshot of the vol surface is something of a fool's errand, but you know what? We're going to dive bravely into those waters anyway. As of a few minutes ago while Jeff was talking, we were looking at that front portion of the curve. The cash was a little bit north of the 20 handle. 2015, we had that no future hanging out almost equidistant at about a 2020. That's still down a little over a point, about 1.05 points from where it was this time last week. And the DEIS future was hanging out at about a 2015. So actually the DEIS was literally in line with the cash, which is also kind of wonky. That puts it down almost a full point, about 0.9 of a point from where it was this time last week. And as we go out farther down the curve, let's go out to summer of next year. Let's go out to July of next year. Looks like we top out on the curve at about a 23. So gets a little bit loftier, a little bit spicier as we go out to November. But then again, you hear those numbers I was just tossing around from April 7th and 8th. It certainly puts the current vol regime in perspective. But that said, I guess, Mr. Meatball, we will start with you, sir. What is catching your eye on the vol surface right now?
The VIX term structure this morning was very ugly. We're still actually currently in a little bit of like mini backwardation. November is trading 2025, December is trading 2020, and the VIX index is 2045. So a little front end of the curve showing a little bit of real fear, but the rest of the curve still, nicely bid at a big contango. So that front end of the curve is starting to show some signs of wear.
It's been beaten up one too many times, sir. It just can't take it anymore. It's all black and blue, that front future. I can't wait to get the heck out of Dodge. Mr. Rhoads, same question for you, sir. What is catching your eye on the vol surface this week?
So we've still got that December thing, and I want to where it's not discounting like it normally does in the VIX curve. It will after we get the de-Fed meeting out of the way. And we noticed on the Eurex show earlier this week that you're not seeing the same. The VSTOXX term structure looks like it's supposed to look. It's got that December dip. The December contract is at $1.50, I guess a 1.50 euro, but a $1.50 discount to January, while the December contract in the US is at about $1.20 discount. But the December contract is at about an 85-cent premium to and that's the VIX contract relative to the December VSTOXX one. I think you could own VSTOXX and short VIX future here. And here's my thinking on it, and it's kind of opposite of what happened with Brexit. The June contract, which I believe was the front month back when Brexit happened, over on the VSTOXX was pretty elevated, and VIX was not. And of course, Brexit surprised everybody. The VSTOXX went up 2 or 3 points, VIX went up 8 or 9. So let's fast forward to the next Fed meeting. Let's say VIX is a little bit, a little elevated, because that seems to be what we think the market's fixated on. If something horrendous for the global markets comes out of that meeting, VSTOXX going to catch up with VIX. If we get past that meeting and it's not, it's not a big deal, or we don't have enough information for the markets to react quite yet, then VIX probably going to come back down in line with VSTOXX. So I'd like to see them widen out a bit more, but I do think that there's a good trading opportunity. And I know I'm deviating from just talking about the VIX curve, but I think there's a pretty good trading opportunity with shortened DEES VIX and going long DEES VSTOXX. Maybe if they spread out to a point or so. Right now, they're, again, about 80 cents. A little more than that. So that's actually, they're right at a point. I apologize. The numbers keep changing on me. So, I think at some point those two get in line with each other. So there's a trading opportunity based on the seasonality of the DEES contract not really doing what it's supposed to do.
There you go, listeners. A little bit of spreading opportunity from U.S. vol to across the pond as we go out to the land of VIX options, listeners. You already can probably guess it's a spicy one today. It's been a spicy week. We've been at or threatening 1 million contracts pretty much every day this week. So I've said it for a while now. One of my indicators that things are getting interesting out there is when the VIX ADV crosses that 900K threshold. It's not usually a sustainable number. So when we're up there and we're hanging out there for a while, maybe things are getting a little bit spicy. And that is the case this week and indeed today. 943,000 contracts already on the tape in VIX land right now. So an absolutely explosive day. The ADV is 926. Weirdly enough, it's actually down 21,000 contracts, even though we've been putting up some size paper this week. So I got a feeling maybe after today that ADV will turn back around. When VIX ADV hits 1 million contracts a day, then things are really looking wild. Speaking of looking wild, listeners, how's our top 10 size positions in VIX land looking right now? We're still hanging out 8-2. It doesn't matter what happens in the world of vol or anything else. We're going to hang out at 8-2 seemingly forever. I don't know what it will take to get some more puts into the top 10 or to kick those 2 puts out of the top 10. But either way, they persist. Cost you 243,000 contracts to break into the top 10. And I'll get you to our old pal, the Feb 47 halves. Seem like they're the newest addition to the board. They've been around for a little bit now, and they're coming in at number 10 today. Number 9, 260 on the tape for our first of 2 puts, the Nove 16 puts. If you're laughing and saying Nove 16 puts, who would buy those right now? How about number 8, 261 of the Nove 15 puts? I've been saying this forever. I don't know why this fascination with the 15 puts persists month after month all year long. Paper has been buying them for size every month. Every month it has not worked out, and yet still size open over 250,000 for the number 8 spot. No 15 puts. The rest obviously all calls all the time. Number 7, 262 of the Nove 25s. Number 6, 263 of the Nove 47 halves. So right back to the fun. Number 5, 276 of splitting the uprights, the DEES 35s, listeners. Number 4, 324 of the DEES 60s, right back to the fun. Number 3, 332 of the NOV 35s. Number 2, 388,000 of the D's 30s. And number 1, all things considered, for a lot of the nonsense strikes and positions we talk about on this list every week, number 1 is, I think you could call it fairly reasonable, especially given everything we've been talking about with the potential opportunities for some vol dust-ups in December. What is it? It's 420,000 of the D's 25s. Listen, I'll leave it up to you whether you think those are reasonable or not. But we all know what is never reasonable. It's Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, I have accused you, some might say unfairly, of being unreasonable. So prove me wrong. Have at it, sir.
Oh, I'm a reasonable human being. First off, last Friday, I know I'm going backwards here, I was wrong on something, and I'm always, the first one to point out my errors. When VIX was this is last Friday, when VIX was at 2158, somebody sold 5,000 of the November 12th 18 puts for 15 cents. It definitely looked like an exit. VRO came in at 1715, so if they just held them through settlement, they would have been worth 85 cents. When I said this, I was like, looked like they were just salvaging what they could. And here's my quote: I think this is a good exit trade because a sub 18 VRO doesn't look too good next week. And we got a sub. Basically our settlement this week was 85 cents below 18. Monday, somebody bought the November 12th 22 puts. They bought with VIX at 1819. They bought I think a couple hundred of those. They paid $365 for them. The break even was $18.35. It looks like they held them, and they made $1.20 off of those. Nice, decent trade there. Tuesday, VIX at 1769. Had somebody buy 19,000 of the November 26th 20 calls for $1.06. The bid late yesterday, and of course, it's going to change 5 times while I'm talking right now, but the bid on the close yesterday was $1.42 on those. So they're looking, up 36 cents on those. There have been a lot of bullish trades using that November 26th expiration, and I'm not 100% sure why. They just seem to keep coming up over and over again. On Wednesday, one of the few bearish trades. Wednesday, VIX at 1753. Somebody bought 2,000 of the December 3rd 18 puts for $1.11. I personally wouldn't do that trade. I'd do something closer with some negative time value, but looks like what they want to do there. Yesterday, early in the day, and this is where I get Mark Longo to lose his mind over a terrible execution.
Impossible.
And you're going to love this one. About 10 minutes into the regular session with VIX at 1852 yesterday, someone came in and bought 180 of the November 26th, 11.5 calls for $9.05. The bid-ask spread was 531 by 906. Oh. Way to work it in the middle there, guys. Geez. Good job.
Oh, yeah, that is bad.
Oh, it gets worse. It gets so
I thought you were about to
worse.
tell me more of the 200 puts or something, but this is
no, but I've got an update on that.
Okay.
1 second later, buyer of 150 of the November 26th, 11.5 calls for $12.44.
What?
The bid-ask spread was 531 by 12.45. Way to work it, guys. That's great. I would fire somebody over that.
That's a fire your broker
that
right
is,
there.
And I know, coming behind people and saying what people should have done, but the break even on that second lot is $23.94. Yeah, I mean, gosh almighty. Oh, and I did also want to point out, you were talking about the massive volume, and I always talk about how many pages it takes for me of downloading. There's 24 block trades on each page on the Bloomberg page. And Tuesday and Wednesday, I didn't even have to download a full page. There were fewer than 20 block trades in the weeklies. So, but also next week is a standard expiration. Then we've got the Thanksgiving week that I think maybe people probably want to avoid a little bit. I haven't seen a lot around Thanksgiving week, so it might be a calendar anomaly or something like that. Also yesterday, and kind of, I know I know what you're gonna say to me, so I'm just gonna say it, and then I'll let you say it to me. With VIX at 1819, somebody bought the November 26, 17 puts for 45 cents and sold the 16 puts for 16 cents. Net cost of 29 cents, looking at 71 cents if we can get VIX under 16. I know I was poo-pooing vertical spreads in VIX, but I was talking about upside ones, not downside ones.
Oh, so the put spreads are good. Okay, I got
it. The put spreads are okay, especially, come on, when was the last time we had a settlement under 16?
Ask everyone who bought a 15 put all year long.
No, I think whoever sells those 16 puts to help pay for the other put listens to this show. And then today, this morning, with VIX at 1920, we had a seller of 150 of the November 26, 21 calls for $1.04. They bought the 31 calls for 38 cents, took in a 60-cent credit. VIX went up with about an hour or so later with VIX at 2110. Somebody came in and sold 200 of the November 26, 21 calls for $1.45, and they got sneaky. They bought the 32 calls instead of the 31 calls for 49 cents each.
Very sneaky.
But I'm going to make an assumption that probably, and that's a 96-cent credit. I'm going to make an assumption that was probably the same trader.
All right. A lot going on there, Mr. Rhoads. Thank you for your... We're already kind of come up against it. We spent some time...
I know. I'm trying to go quick because I know where we are.
That VIX decomposition tool, but that was fun stuff. I'm going to blow through really quick. There's a ton of paper this week, listeners. Again, I encourage you to check it all out. Today, already almost 1 million contracts on the tape. The hot option out there today, almost 71,000 of the NOV 25s. Average price for these, 46 cents. Looks like they may have gone up as part of a vertical, either the 25.35 or the 25.30. Seems like both of them are trading. We asked our audience right now, you like these for 46 cents? 60% of you right now want to buy them. 40% of you want to sell them out there. So makes a market, I suppose. Yesterday, a big hot day, 1.12 million contracts. The hot option yesterday, again, NOV 25. So this might be our strike of the week here. 47,000 going up yesterday as well. Average price for those 41 cents yesterday. So you got a whole extra 5 cents if you waited a day out there. By the way, we asked you yesterday, the D's 21s going into the close of the day was during option block. That was the hot VIX trade yesterday. They went up 41,000 times for $2. We said at that price, you like them, and that's still live. It's winding up right now, but 50% of you want to sell those. You say you're not down for D's 21s for $2. 25% each roughly want to buy them, and 25% each want to sell them as part of a vertical. Nobody wants to buy them in a vertical, which is interesting. Wednesday, also a 1 million contract day, 1.06 million. The hot option out there, a funky one, the March 50s, 5-0s, going up 80,000 times. It's hard to tell. It might have been a bit of a roll against 80,000 of the Jan 47 halves. Interesting time to be rolling your Jan 47 halves already, but I guess you take what you can get. And out to Tuesday, 960 on the tape, so threatening 1 million contracts again. The big dog out there, looks like we had a roll NOV to D's 35s, 190,000. So obviously you're talking 380,000 contracts just in that one roll. Take that off the tape. It's a little bit of a different story. In fact, the number 3 trade is only 29,000 of the NOV 16 puts. So kind of obscuring things a little bit. Monday also pretty active, 813,000 contracts on the tape. The hot option, 71,000 of the D's 19 puts. These going up for about $1.87. So not giving these away. I've expressed my reservations in the past about spending more than $1 for any put in VIX right now. I'm kind of leery to do it. But we thought we'd ask you folks. You down for those? We also had the NOV, actually about the NOV 18 puts. Those were the top dog when we were doing the option block show. Those also traded for 71 cents, about 60,000 times. We said, are you down for those? And you said 70% of you wanted to buy them. So apparently NOV 18 puts, that's where you want to be out there. Mr. Meatball, I see as you're playing with your new Vol puppy there. Anything catch your eye in VIX options this week?
Yeah, I mean, there was kind of consistent call buying all week. And, today with, when the market exploded, it's not like we saw a bunch of major people stepping in to take money. In fact, just the opposite. Mostly traders are, most of the trades were, you got some cheapy put spreads, but nobody's taking off their positions, which I think is interesting. You would think when the VIX was at 23, some people would say, I'll take a little bit of money here. Nope. So they're still bracing for something.
Yeah, they're not doing the monetize instantly dance that has been the norm out there in VIX call land for a while. Is anything normal in the world of vol ETPs, listeners? Let's see. SVIX, as we're coming into this portion of the show, at about a 19 even, up about 3/4 of a point from last week's show. The ADV is hanging out right a little bit north of 5,000, has been hanging out there forever. Today, putting up 3,500. SVIX just has a hard time getting out of its own way from a liquidity perspective. UVIX at 10.25, down 1.25 points from last week, putting up about 31,000 contracts. That was probably at the start of the show. Let's see. It's a little bit more now. It's about 45,000 contracts on the tape. The ADV is 46,000. That's down about 3,000 from where it was this time last week. Let's get out to UVXY. Was at 10.75 at the start of the show. That's down about 1.25 points. It's up to about 11 right now. It puts it down about 1 point. And it already done almost its ADV at the start of the show, about 110,000 versus an ADV of 125,000. That said, that ADV is down 15,000 from last week, but I'm guessing it's going to go back up after today's volume. And then, of course, VXX getting spicier as well. Was at 35 1/3 when we kicked off the show. It's up to 34.80 right now, so gaining back nearly half a point, so down about 1.5 points on the week right now. So VXX getting a little bit spicier as it seems like the rally starting to fade a little bit here towards the end of the show. VXX putting up right now about 50,000 contracts. That's pretty hot against an ADV of just 37,000. That's actually going 4,000 in the wrong direction. But I have a feeling that will be increasing. Mr. Rhoads, what is catching your eye in the vol ETP-averse this week?
They're doing what you would expect them to do. The flat curve makes me not excited either way with them right now. Normally I like the curve being a little contango, so if nothing happens, I can benefit from my SVIX. So I'm very comfortable with being fully overwritten on that thing right now.
And you had something you wanted to mention about UVIX last week. Anything?
Oh yeah, year to date, UVIX is up like 15 cents if you buy it for the weekend. It's given it all back since but that's kind of how long volatility trades work. I know that I know you and I both know from personal experience it hadn't been working particularly well lately. Thank goodness I combined it with SVIX. That's all I can say about it.
I may or may not have.
I'm very happy that I got that SVIX position on Mondays these days.
Yeah, I may or may not have been doing it the last few weekends for exactly reason.
You mentioned it in passing. I heard you mention it.
Exactly.
That's actually why I did the follow-up.
Mr. Meatball, anything catching your eye in the world of inverse or levered vol or anything else, sir?
Nothing in particular. I'm interested to see whether they're going to get that 3x trade passed, that 3x passed. Today, a little bit of volume, mostly stuff expiring today. They've had a pretty nice move this week, relatively speaking. But as so goes, VIX is higher than where it was on October 16th, and these are all down from there, and that just shows you how that decay is really a problem.
And are we all down in the crystal ball? Let's find out, listeners.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, and I'm just re-racking the numbers here right now. I got a little bit of a dissonance, but we're moving in my favor, listeners. And you know what? You might have thought I was being aggressive, scumming Mr. Rhoads to the downside, but it's working out in my favor. VIX Cash just ticked 20.45 right now. Puts it within 1/10 of a point of my 20 double from this week. So there we go. A bullseye for me. I need another one. That's going to be good. That's going to pad my ledger a little bit here for this year, listeners. I had a couple of bullseyes recently, so this vol flirting around the 20 handle has been good business for me. Andrew was on the show last week. He was at an 18.99. No joy for him, I should say. Mr. Rhoads was coming in at 20.75, but we all knew I was the more prescient of the two listeners at 20.55. And then Bill Luby joined us on the show last week as well. He was at an 18.21, so he was feeling a lot of downside. So the courageous Vol folks, we picked some upside this week, and lo and behold, it worked out. So as the bullseye person, I guess I will go first for this time next week. Let's see, what am I feeling for this time next week? I think I'm feeling things are still going to be a little bit spicy. I'm going to say 22.35. So there we go, listeners. That is your scarily accurate prediction for next week. And then Mr. Rhoads, as a second place consolation prize, I will let you go next. What are you feeling?
Gretchen says 2035.
Oh, 20.35. So she's going 2 points below me exactly. Interesting.
Yeah. No, and that's the formula. Where was I last week?
You were 20.75.
And you were what?
20 double.
Oh.
So I got you.
Okay.
So was Gretchen mad at me last week when I scummed her?
Very much so.
You know, she's
coming for you.
Have you built in?
Don't piss off the AI.
Have you built in rage and or empathy into your model?
I actually think Gretchen is proof that AI is BS. Go ahead.
Mr. Meatball, sir, what are you feeling for palindromic nonsense for this week?
You know, I think we'll be higher earlier in the week and then lower later in the week. I'm going to go 1991.
1991, an excellent year. Is it an excellent vol prediction? I guess we will find out. And Mr. Meatball, we heard your puppy barking. Let me guess, your new dog's name is Vixie.
No. Her name is Ivy.
Ah.
She's you know, because every dog from Chicago is named either Wrigley or Addison. So we were trying to
That's not true. My first dog was named Cboe.
Oh, jeez. Wow. You're really kissing up to the corporate masters.
I'm dead serious.
No, I believe you.
I totally believe you, which is
Vixen would
why.
have been cute, though.
I think that's funny. Yeah,
I'm going to remember that for the next time we get a dog.
Vixen would have been good. I see the Flowmaster was in the chat. He said, great show, gotta go. And hi, Russell. What am I, chopped liver, Mr. Flowmaster? You're just saying hi to Russell? Okay, fine. I passed along your hi to Mr. Russell there. I guess Meatball and I are just chopped liver to the Flowmaster. He has no highs for us, Mr. Meatball. So remember, check out that cool new VIX Decomposition Tool if you are so inclined. And Mr. Meatball, where should folks go if they want to check out your cool goodies?
Yeah, you know, find me on YouTube. I'm putting out video content all the time. And follow me on Twitter at OptionPit.
At Option Pit, the place to go to learn more. You too can get flashed by Andrew 5, 7, or 9 times in a dark alley of your choosing. Option Pit.
Better than 6, 7 times.
That's true. That is true. You want all the flashes you can get out there. And then maybe you too can have a lottery. You can name Mark's next dog, as long as you call her Vixie.
Just do this when they say 670 and they have no clue what you're doing.
They will have no idea what you're doing. Mr. Rhoads, if folks want to catch up on all of your vol musings or maybe keep up with your travels next week as you're hitting the conference.
Just find me on the Twitter. Russell Rhoads. That's the place to find me.
Are you going to be live tweeting the conference?
And if anybody's going to Quant Mines in London this next week, find me.
Find Mr. Rhoads. If you find him, he'll be wearing his Waldo shirt. You will win a fabulous prize. I don't know what it is, but Mr. Rhoads will be on the hook to give it to you. And of course, while you're checking things out online, make sure you're checking out our friends over there at Tasty Trade, tastytrade.com/podcast. They really want the Vol Views audience. What broker doesn't want the Vol Views audience at the end of the day? You folks are kind of the best in the biz. Check out tastytrade.com/podcast. See what deals they got for you. They got some cool stuff for you. That's going to do it for us on the on-demand side today. Not going to do it for us on the pro side, though. I'll be back in a little bit to hold court for all of our pro members with the official after party of Vol Views, known as Options Oddities. Should be some wild trades in there. We'll get to it. Have fun. Then we'll see you back here next week. Another episode of Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.